In this video, I want to talk about shelf corporations and why you need to pay attention to how you go about registering a shelf corporation, or if you're even thinking of buying a shelf corporation. Here's some of the tips I'm going to give you. Today, we're going to share specifically 5 things that you need to know before you buy a shelf corporation, whether or not it's worth it. So let's begin. First thing you want to know about shelf corporations is when you start with a shelf corporation, when you buy one, thinking that you're going to get a lot of funding, one thing you have to keep in mind is that when underwriters and creditors will look at that shelf corporations, it has an inconsistent history. It has nothing to do with you. It's been over several years it's been shelved, and therefore a lot of people think that just because it's been shelved, it has that history, you can bypass all the credit requirements, and that is not the truth. Fact of the matter is, shelf corporations, when you register them, they're pretty much as good as new companies. It doesn't really add any value in terms of underwriting, and if you're going to go ahead and get underwriting, there are certain conditions that will apply. We're going to talk about that on point number 2. The second point about shelf corporation is the fact that you have to add more personal guarantee. A lot of people think that if you have a shelf corporation, you can cut the slack, you can just go straight to the funding and you get a lot of money. The reality is, when you have a shelf corporation without any established corporate credit, you're going to have to spend a lot of time developing personal guarantees. You have to put a lot of personal guarantee with it, which means that your personal credit profile is going to be used more as a consideration towards getting the access to capital instead of your business profile, let alone the history of how long that company has been registered. Which brings us to our third point, right? When you start doing funding, you're looking for high amounts of money, right? High amounts of dollar volume. Let's say if you're in real estate, let's say if you want to get access to capital because you want to buy a company or something. In order to get access to that, you'll have to create financials. You have to create financial statements. You'll have to create income statement. You'll have to get access to a tax statement, right? All these things have to be filed. And with that documents, with those financials that correspond to the access of capital that you're looking for, it is a possibility that you get denied just simply because you don't have that credibility or history behind it. The fourth thing you want to talk about is the inadequate business profile online. And what I mean by that is, if you have a shelf corporation and you have profiles online that can show that, hey, that shelf corporation hasn't been around for a while and it's not real, and it's just the fact that you just registered, you took over, and you're essentially using that information to get access to funding, the inadequacy of the profile, the inexistence of your name on those profiles will make it a very difficult thing with the syndicated databases that they have to get access to the capital you're looking for. You're essentially going to do, like I said when we discussed in point number 2, another personal guarantee, which doesn't really help your situation. Because at the end of the day, what you're trying to do is you're trying to get access to capital fast, a lot more money than what you would get normally, right? And a lot of people buy into this whole shelf corporation game to bypass the history of the company. And the reality is, it'll be solely dependent on your personal credit. So don't let anybody else tell you otherwise. And in fact of the matter is, if you want shelf corporation, it's good for status. It's good to say, oh, look, I've been in the company, had a business for 10 years, right? That's the only thing it is. And the fact of the matter is, in financial activities, you're just really starting off. And I guess the point number 5, which leads us to all roads lead to the same destination, right? All roads lead to the same destination. And what I mean by that is, if you have a shelf corporation and you're trying to establish credit on it and you think you can get shortcut, it doesn't work that way. You're essentially going to start brand new, build business and corporate credit on it, apply with different creditors and vendors, and you're going to end up in the same scenario. So why bother buying a shelf corporation for such an expensive cost when you know for a fact that you can do a better job yourself with a brand new company that you can incorporate and take that company, build a credit profile on it, and get access to a lot of capital. Now, back in the days, there were a series of lenders that would consider a shelf corporation and its history to qualify you for funding. But even at that, like I said, they would ask you for more added personal guarantee, and that's not what you're looking for when you're applying for shelf corporations, right? So those were the 5 points of warnings in terms of getting access to capital using shelf corporations. Let's go over them one more time. Number 1, you have inconsistent history, right? It's not going to help you get access to the capital that you're looking for if your profile is not consistent to the years of the business that it's been. Number 2, you're going to have to add more personal guarantee, which is a lot of risk for a lot of us, right? Because at the end of the day, we're trying to build no PG and PG funding. Now, we want to try to minimize the PG that we do. But if you're not trying to guarantee a lot of it, you don't want to add more stress on the personal guarantee factor, then the shelf corporation is definitely not the way to go. Number 3, if you're asking for a large amount of capital, a lot of money or financing, you absolutely need to submit financial documentation, which includes tax returns, financial statements, income statement, cash flow statement, assets and liabilities, everything that you need to evaluate on an underwriting basis to give you the qualification of funding on a larger level. Number 4, you have inadequate business profile, meaning your name does not appear on the CEO list or executive list when it comes to previous searches of that company, if ever it were entered into other groups of syndicated databases. These could be market surveys, research were done by other companies, or simply in our internet databases that creditors can simply have access to. And finally, all roads lead to the same destination, right? At the end of the day, you still have to build credit on your company or that shelf corporation, right? So why spend so much money buying a company that only has an associated years on it, which regardless in underwriting doesn't really matter, right? Why not just start from anew, build an LLC and establish credit on it? So those are the 5 dangers of shelf corporations. I want you to really pay attention to what I just shared with you. Okay, I hope this video was helpful. If you haven't subscribed to the channel, subscribe, turn that bell icon on so every time there's a new video just like this, you'll be first to be notified. Once again, I'll be Tarafdar, your guide and mentor. Bye for now.